Let's look at the US dollar versus the Taiwan dollar. First off, read this disclaimer carefully. Let's get the big picture, because there's been some rocky times in the market. If we look here at the portfolios, we see that the doom and gloom portfolio is actually picking up a bit. We need to keep a close eye on that one. Here you can see what happened yesterday in the sectors. Pretty grim picture. So there's certainly some bearish sentiment in the market. If we go over to the megatrends, you have some green patches, but overall, it's been quite rocky. Cordless electricity was hit very hard yesterday because there's bad news about Nikola, but also now about Tesla. Battery day wasn't as people expected, so it's a mess. It certainly is a mess at this point. And here you can see some other themes. This theme, the police violence theme, is certainly something that is outperforming the market. Okay, so let's now look at the forex pair in question. So USD/TWD is the ticker, which means that if you see the line go up, it means that the US dollar is strengthening vis-a-vis the Taiwan dollar and the inverse. So here we go way back here to actually 1984. So this is like the gargantuan picture. So here, major weakening of the US dollar. Then you have a solid period here of strengthening. So from 1992 here to 1998, super performance, 43% gain for the dollar. But after that, you can quite clearly see that the dollars, it has more or less been in a downtrend. Vis-a-vis the Taiwanese dollar, which is quite interesting, because we are overall seeing lower highs and lower lows, but the lower lows, it's a bit messy. What is interesting, one of the reasons why it popped up on my radar is that, yes, we do have these clear lower highs. That's of course a key part of a downtrend, but if you look at the recent lows, we do have somewhat of a rising lows. So we do have higher-ish lows and lower-ish highs. So there is a bit of a shift. It's a bit of a shift. It's way too early to see like, okay, now the good times are coming for the dollar in this pair. It's too early, but there is some change here for sure in this big picture, and these are the decades in front of us here. So when there is a change in like a chart that covers decades, it's way more meaningful than if we go let's look at the last hours. So we're looking at decades. This is the big picture. Something is afoot. Another thing that you can probably quite clearly see is this cyclical pattern. This pair moves in clear rise and declining cycles, which means that this pair is very good for swing trading and also part of a market neutral portfolio. Because the great thing about forex is because there are so many different pairs, it means that you can have a portfolio which is not correlated with any market. It's not correlated with anything specific broadly in forex. Bonds, stocks, commodities, it just is market neutral, and that's like the holy grail of holy grail of investing. So if you look at this rally here as an example, this was a 9% rally, but you need to be aware, of course, that in the forex market it's very easy to get leverage. You can have 500 times leverage in the forex market, hence these moves can become much more significant. So let's now look at if we can see some cycle patterns, or whether there is some consistency to the cycles. Because here we have some. So if you look at these most recent cycles, if you move them a little bit like that, so you see this is a rise, decline, rise, decline. Rise is decline, rise, decline, rise, decline. So it seems like some of the more recent cycle patterns, there has been some level of consistency. It could be that this cycle pattern here has now ended, because of course they don't track perfectly. So given that there is a cyclicality, I think we could make a bit of a gamble or assumption that maybe this declining cycle is finished. If If that is the case, then we have a rising cycle on the horizon, which would be bullish for the US dollar. We have seen the dollar now strengthen a bit against quite a few currencies, hence there is something afoot here with the dollar as well, in a broader perspective. If you look at the RSI, look, if we can see some patterns here, you can see that this pair is a bit responsive to RSI oversold and overbought levels. Especially as of late, you see here we get oversold, and it was pretty close to like the best buying opportunity. Yeah, we did get oversold, we did get the bounce, but then we did deteriorate further. If you look at overbought levels here, they have sometimes been able to predict the tops, but we have seen us be overbought for multiple weeks. Hence, it's not like super reliable. There is some reliability, but you gotta be a bit careful if you use it as signals to go long or short. You can see here that there's a minus 16% correlation with S&P 500, so slightly negative. Let's go here to daily data points. So here I can see these cycle patterns in much more detail. So you can see that the cycles are, pretty extensive. I mean, they're pretty big. So this cycle here, as an example, that was 959 days. That's a long cycle, which means there's an if, but there seems to be some kind of floor around here, which is the level we recently bounced from. If this is the start of a new rising cycle, it could be, some significant time ahead of us, in which we could see an overall bullish rise here in the US dollar. This period here, as an example, this first rising part of the cycle was extended over a year. So the way you can use this, okay, if you're a long-term investor, then of course you can hold the dollar in this pair. But you can also use this for day trading, because if this is the beginning of a major rising cycle, it means that every day in the market when this pair is trading, there will be a bullish bias, meaning buying the dips has a higher probability of working. Similarly to how during this declining phase here, there was a bearish bias, meaning if you were on the bearish side of this pair, then you had a higher probability of being profitable when day trading, because you knew the overall big picture bias. So if there was like a spike during the day, you knew that, okay, well, given that the bigger picture is a downtrend, then there's a higher probability that bears are going to come back in force. So yeah, that's how you can use it. Okay. Yeah, so the Forex market, it is a very interesting market. It is super liquid, there's tremendous leverage opportunities, very easy to make portfolios that are market neutral, which is really good. So this is definitively something to think a bit about, okay? A lot of you maybe are very focused on stocks. I do like stocks myself. The vast majority of the portfolios I make here, they are in the stock market for sure. But I also look at, the bond market, fixed income here. We look at natural resources, commodities, cryptos, precious metals, Forex, because that's, how you can make these portfolios that can withstand all kinds of weathers. Whatever you do, of course, don't fight the trend, and may the trend be with you.